Welcome. Inside this video, I'm going to be showing you the power and the accuracy of the standard deviation, okay? And all of these examples I'm going over was from last week, okay? I like using recent examples and old examples because it shows you it was working back then and it's still working now, okay? It's not going to change. This is how price delivers. It's more than buyers and sellers. Okay. So right away, as we're going into the week, we need to know what my bias was. So I was bullish for this previous week high. So right here is where we open the week. So as we were going into the week, I was bullish for the previous week high. That is mainly because I was also looking at the ES. The ES had a much more clear drawn liquidity here. Okay. It had a weekly FEG that we were very close to going into this week. Okay. And that's also taken into account our SMT and stuff we had at the lows bringing us up. Okay. So we were bullish as we were going into starting the week. So they start out Monday here. What do? They trade straight away from the midnight open. Well, not really straight away. Let's zoom in here. So let's look here at the projection we have. So you can mark out the midnight open right here. This is our midnight open for Monday. So this was our current manipulation of the midnight open. What happened here? We expanded above the 3.5 to 4 standard deviations. What does that typically tell us? We're very one-sided, okay? And you can see that's exactly what happened. They expanded above our projection. They gave one more retrace below an old low onto the breaker, which also went right below the weekly open right here. That's what this line is going across, okay? Right below the weekly open, and then rallied. All right. So then from there, I could not trust our current lows. Okay. I did not trust these lows. We have no SMT throughout here. None of these are protected lows. So I knew we were going to come back for these, and they just did it pretty much overnight. They dropped it all the way down. And from here, they formed our double SMT. Okay. And this is very important too, because if you notice, it's below the weekly open. It's below Tuesday's midnight open. Okay. So we have Tuesday's midnight open right here. So what did they do? They traded straight down from the midnight open. So what can you typically anticipate with that? That the current move happening is the manipulation. Okay, because they have nothing above the midnight open this day here. So it was very high probability we're going to come back to that midnight open. Okay, there's times when we won't, just like you saw yesterday. Okay, we expanded above the 3.5 to 4. This was enough below midnight for that day. But here we had nothing above. They took it straight down, an aggressive one-sided move. And what do? NQ comes up short of the previous day low. Okay, look at the ES. The ES comes down here and takes out Monday's low. So right here, the ES made a new weekly low. The NQ failed to. It's below the current midnight open, our weekly open, all of our power of 3 opening prices. Okay. So then from here, they start the move up. All right. And where do they take it? Well, with our double SMT, we have a valid projection right back up, okay? And you can see that double SMT, the second SMT was right here. I don't have it marked at the moment, but this was the second SMT. It's definitely not as clear as the first one, but these second SMTs are what I love using for my entry. That is how you're going to get those explosive entries, okay? Price is going to expand after we see that second SMT, that higher time frame, and then a lower time frame SMT. Okay, so from here we have a valid projection back up. Okay, we're manipulating the weekly open, our midnight open. We know we're going to come back up to this midnight open, so we're projecting back to the upside. So we have our 2 to 2.5 standard deviations up here, well above the current weekly high. So they rally the rest of the day, and what do? They take it to the midnight open, yes, but they're still short of our standard deviation as we closed Tuesday. So let's think. What do we have Wednesday? We had CPI data, and data is so important. And this clip right here, save it, study it, go back and study every news report you can. All of these bigger ones, think like this. News can only be used in one of two ways. Okay. News is either the manipulation or it's the distribution. Okay. And so let's think here. We're moving up. We're short of our standard deviation. Okay. Our current weekly lows are very clean. We do have double SMT right now. So we're at least expecting our projection to play out here. But from there, we can reasonably anticipate we're likely to come back to these lows later in the week because they're very clean. Okay. They look like pretty much equal lows right here. So people were longing, putting their stops below these lows. They think they're safe. So the night before CPI, so it was somewhere in here, it was like 9 or 10 p.m. when I said it, I think. Someone asked me my prediction for the CPI report. And I said I wanted to see us move up to trade up into our standard deviation projection. And then from there, we could form SMT and sell right back off to the weekly open and the weekly lows. So let's look here what they did. So as we're going into Wednesday, all right, so once again, the midnight open. See how everything's coming back to this midnight open? The midnight open is the true daily open. This is what unlocks the best projections, your daily projections. So look at this, the midnight open manipulation. It's no different than how I'm projecting any other time. The low to the high here. Look at this. 3.5 to 4 standard deviations aligned right inside our bigger picture projections, 2 to 2.5 standard deviations. Okay, so you can see here where they overlap. This is the area they overlap. Look at that accuracy at the high that formed. You're going to tell me CPI is, I mean, buyers obviously were strong, man. I mean, they just sent that straight up, and then there was just a big seller that stepped in there right at our standard deviation levels in SMT, right? No, it's an absolute joke. That's an absolute joke. There's no logical way you could explain how buyers and sellers move it straight to our standard deviation levels and form SMT every time. Every time. So we can zoom in here again on the 1 minute and you can see the SMT that occurred here. The ES went up, made this higher high. The NQ came up short, failing to make that higher high. So right there was our SMT. We got short right here. And yeah, we did sell a bit early, I'll say, because they did give a nice retrace 2 times before actually selling it all the way off to where we wanted. But this was still a beautiful move. And, ooh, I don't think I mentioned this actually. So let's look back here. We're looking at Wednesday still. Let's look closer into Wednesday because there's more than the midnight open projection you could have used here. So let's look at our other power of 3 openings. So I talk about those 4-hour opens. We had the 6 a.m. open right here. All right, that's our 4-hour open. 10 a.m. wasn't till right here. Okay, so all this price action was inside this 6 a.m. candle. So let's think, open, low, high, close. That's the only way it can go. Well, it can go one of 2 ways. Open, low, high, close, or open, high, low, close. So let's look at this. Our 6 a.m. projection. Look at the bodies of the candles respecting the 2 to 2.5 standard deviations. So we had 3 projections aligning up right in here. So it was very high probability to see a reversal unfold here. And then SMT is what confirmed it. So then from there, we were short. And then look at this. They take it all the way down to 3.5 to 4 standard deviations. And that was the low of day. Once again, just like it gave the high of day. All right. SMT and the standard deviations go hand in hand. It's showing you exactly how price is moving. So from here, going overnight, they left equal lows right here. Okay. So This is already a pretty strong draw whenever they leave equal lows like this, but whenever you also take into account this, so let's zoom out here to the hourly chart. So I'm going to remove some of these previous drawings from the examples we were talking about. I don't like to clutter the chart. I like to have as little things on as possible. Okay, so we had SMT at these lows, correct, but we already played out the projection. We formed SMT. This swing played out, all right? So it's not like if we come back down to the lows now, that swing just failed. No, that swing played out. It did its job, all right? So now from here, let's zoom out here and look at the current weekly open. What is happening here? Pretty much all of price so far this week has taken place above the weekly open. Okay, we have little to nothing below the weekly open. This is no different than how I'm talking about the midnight open on most of these days. Okay, so from here, you can also look at the lows we're building, and you could draw a box across here, and it looks like obvious support. Okay, everyone and their mom has been buying this all week, putting their stops below these lows. So I said it was like 6 p.m. It was right in here, right before the sell off happened. I gave my prediction to the Discord for what I wanted to see in Friday. I was saying I wanted to see a sell off into new weekly lows. These lows were way too clean. I thought we'd run through them. And that's exactly what happened. Although they did it with news in Asia. Okay, so didn't get to partake in any of this downside move, but they took it right to where I wanted. I mean, they took out all the equal lows, the current weekly lows. Something they did here was they left equal lows again, but this isn't ordinary equal lows, because if you look, the first set of equal lows here is actually a daily candle with no wick below. Okay, so it's likely you're going to see this level be hit next week. Okay, but from here, I mean, you can see it's very clear here on the 4-hour chart. Okay, they formed our breaker right here. Once they displaced down, this formed the breaker. Then you can see we came back up, retested the breaker, and not only when they did that, they came back up and closed through this volume imbalance. Okay, and then sold it off. All right, and then you can see the 4-hour standard deviation I'm using here. Now I'm projecting this 4-hour breaker from the high to this low. Our 2 to 2.5 standard deviations is below these equal lows, which is also another reason I'm favoring us to see a move to this area in the start of next week. Okay. So let's look at Friday. So as we're going into Friday, I had to reevaluate here. I had to have a new plan. Why? Well, because they made the move overnight. They took it right to where I was wanting. All my drawn liquidities got smacked overnight. So here going into the morning, one, you can reasonably anticipate a retrace after something like this, but you need more to it. So let's look again. Once again, this midnight open. That's what this daily candle is marking out here. This is the midnight open. So once again, just like the previous days, is this not the same kind of projection I'm using? It's the same damn thing. I'm telling you, when you put the time in to go back and back test, stop forward testing only. I know there's people watching this that only test this stuff in live markets. You are doomed for failure doing that. Back test. It's there within the charts. That's why I show old examples and new examples, because it was working years ago and it's still working now and it's still going to work tomorrow. So look at this. We have our standard deviation projection. We moved up to 2 to 2.5 standard deviations here. And I actually called this move to the T on Friday, but I took a loss on a trade. And I'm going to explain that here. So I actually called this move damn near perfect. It was on live stream. So here, I'll go through my thought process here. So I was looking at the midnight open manipulation. I wanted to see a move back up. I really liked how our 3.5 to 4 standard deviations was right above the weekly open. So I liked us to draw back for that weekly open. So right here, this is when I was interested in price. we closed above our 2 to 2.5 standard deviations. Okay, so I was wanting to see this move up to 3.5 to 4, and they did exactly that. But whenever I executed, I actually went long on the ES. So I went long right here on the ES, and I got stopped out pretty much 1 point from this low. And then they rallied it right to my TP. So the reason I went long right here was because at the moment, let's see if I can go down to the 1 minute and we can see it. Because at the moment we had SMT there and they actually wiped it. So yeah, it was right here. So at the moment, this is what I was looking at. The NQ was short of this low. The ES had made a lower low there. I went long right here, and then I got stopped on this last run down, and then they rallied it all the way to my TP. But can't do nothing about it. Got to go with the flow. I mean, I had the right read. Just got to dial in on the execution for the next time. Because another thing, so let's look down to the 1 minute here. So this price action was actually very clean. So that low where I got stopped out, if I was actually projecting here, I could have saved myself. Because if you look here, our standard deviation from the high, tell me this is buyers and sellers. Tell me that's buyers and sellers stepping in and moving price. Absolutely not. So then let's go even deeper though, because a lot would say this is a random projection you're using. Okay. Well, right here, this is the 10 a.m. open. This is your 4-hour open, the 4-hour candle opening. We have no last manipulation leg. So here, we're using that first distribution leg to project. Look at that. That 2 standard deviation is the same level as this previous swing. And look at that accuracy of the reversal. All right. Just showing how this stuff is working non-stop every day. Okay. So you can see they gave the 4-hour open, dropped it, standard deviation, and boom, right up to 3.5 to 4. And then what did that do? That gave the high of day once again, 3.5 to 4 standard deviations. Okay. I mean, this stuff, the accuracy of it can still be mind blowing at times. It really can. So then from here, once again, there's not a great last manipulation leg to use here on the 15-minute. Okay, you can see there's not a red candle in here where we formed a breaker. So I'm using this first distribution leg. I like how that aligns down to the 5-minute high to low. And look at that. 3.5 to 4 standard deviations giving the low of day. Or I guess that isn't the low of day. It was the low of the power of 3 before they closed the day. So this video alone should show you the power of the standard deviation. Okay. It is repeating nonstop every day. All right. Just pick your power of 3 and focus with it. Okay. And obviously, you're going to get a better gauge on the market if you're breaking down the monthly power of 3 down to the weekly, down to the daily. Okay. If you're breaking all of those down, you're going to have an even better read, a better understanding of what is happening and why we should do some of these moves. Okay. Okay. Last thing here I wanted to add at the end. I think I forgot to say it in the moment, but I wanted to say this again. So I talked about at the beginning of the video, thinking about news in terms of manipulation or distribution. It can only be one of those. So let's think. We hit our standard deviations to the high with CPI news. Okay, CPI data takes us up. We hit our standard deviations. We form SMT. So what can you reasonably expect data was? The manipulation. Okay. And then from there, data was the high of week. So everyone and their mom that was trying to long to the so-called data high got railed. Okay. We did not refer back to the CPI high. That was the high of week. Okay. Data was the manipulation. Okay. And that's also the reason I wanted to see the sell-off as we were going into Friday, although they gave it overnight. That's the reason I wanted to see that sell-off as well. I wanted to see us stay short of the CPI high and sell us off. If we had taken the CPI high, that downside idea would have been invalidated, because then the news would not have been used as manipulation. Okay? So really think about that whenever data is coming out, okay? Because news can set the framework for the week, the day, the month, you name it. All right? But news is not random. Believe that. I've proved it time and time again, and I'm going to keep doing it. All right? So hopefully you got something from this video, whether it's how I'm trading, how I'm going about projecting, what I'm looking at in price, just how I'm breaking down Power of Three, because this truly to me is the only way I can see price now. Once you see the accuracy of the standard deviation, you're never going to stop using it. All right? So have a good one, everyone. I appreciate you tuning in. I have more coming. Stay tuned. Later.